Are you an investor who's been surprised by a prepayment penalty on a loan? Well, today we're going to talk about 5 ways that you can help to mitigate a prepayment penalty on a commercial loan. Specifically, residential loans almost across the board are prohibited from having prepayment penalties, but commercial loans almost always have a prepayment penalty. So first, the types of prepayment penalties can vary from yield maintenance, which is basically a fixed calculation that is computed based on how many years you have left and the interest rate. It could be defeasance, which is actually replacing the income from that loan for the lender who holds it, or different variations of a step-down prepayment or just a flat fee. So regardless of what type of prepayment penalty you'll have, there's some different ways that you can help to mitigate some of that. The first one would be to think about your timing. So if you plan to, let's say, buy the property and hold it for 5 years, but you might sell after that, think about that timing and maybe shorten it a little bit. So maybe you only want to get a 3-year fixed rate or sign a note that has a prepayment for 3 years, just in case you decide to sell before that 5-year window is up. Also, if you think that interest rates are going to be going down in the future and you're going to want to refinance, maybe you want to consider a bridge loan or shorter term financing specifically so you can refinance when that rate goes down. The second thing you can do to help avoid those prepayment penalties is to negotiate some carve-outs. So again, if you think you're going to sell sometime in the next 5 years, negotiate a carve-out with your lender to say, hey, I think I might sell, so can you avoid the prepayment penalty if you sell to a third party? But still, there's a prepayment penalty if you're just looking to refinance. And oftentimes, a lender might be agreeable to something like that. The third thing to help make that prepayment is to look for assumption terms. So typically a bank loan, because they're smaller amounts, they're not assumable, but you could negotiate that into a prospective purchase if you think that is something that's going to take place. Or if you have a larger loan like a CMBS loan or an agency loan from Fannie Mae or Freddie Mac, those almost always are assumable, provided of course the buyer qualifies. So look for assumption terms and just be aware that sometimes even if a lender says that it's not assumable, they may permit it if you bring them a qualified, key unqualified buyer and they want to develop a relationship with that buyer. So make sure you always ask, even if the loan document says no. The fourth thing you can do is to evaluate the market. So let's say that you weren't planning on selling, you have a prepayment penalty, but someone comes along and makes you an unsolicited offer and you don't want to refuse. Just tell that person, hey, you paid my prepayment penalty and I'll accept the offer. All things being equal, it can be a good deal for you as well. The fifth thing you can do is to find a professional. So oftentimes professional mortgage brokers have relationships with different lenders or may know different lenders who are willing to be flexible on a prepayment term. So that professional can oftentimes save you the money on the back end from working with them on the onset and help you avoid a prepayment penalty if you are concerned about that for your future use. So those are 5 ways that you can use to help mitigate a prepayment. The first is timing. Second is negotiate. The third is to look for assumptions. The fourth is to evaluate the market. And the fifth is to find a professional. I hope this video brought you some value. If so, please like, comment, and share. And if you're looking for investment properties in Central Pennsylvania or Northern Maryland, please reach out to us. We're happy to help.